Okay, Arvind Sanger is now joining us. He's managing partner at Geosphere Capital Management. Arvind, great to have you back on the program. Thank you very much for your time. You've got a pretty nice, decent setup, right? Yields are down, dollar is down, oil is down, and equities are higher. And of course, we got that FOMC minutes, you got the PMI, which is disappointed, all of it indicating to perhaps that the pace of hikes will be slower and not as aggressive. How are things set up as you see it, Arvind?
Yeah, I think we're into this year-end rally, and unless some data comes along in December, which shows an inflation scare, we could continue to have kind of this Goldilocks scenario where it's not too hot. Fed is only going to do 50 basis points in the next rate hike, and you're going to have hope that that inflation, if we see PMIs and others suggesting service inflation is also coming down, then the worst of inflation fears are behind us. So that clearly is a Goldilocks scenario, and I think we probably will continue that for at least a few weeks. I see two flies in the ointment. One is seeing what happens year end on inflation numbers, whether they come down as fast as people are expecting, and if there are any negative surprises. It may not be December, maybe it's January. But the second bigger headwind that I see is we have had China zero COVID, which continues, by the way, but which clearly the government desperately wants to get out of. And you can see the news that suggests that Chinese citizens are very unhappy. But I don't think that's going to happen before winter. But when that does, and when U.S. Strategic Petroleum Reserve releases are done, at that point, if you get revenge travel out of China at the same time that U.S. isn't supplying 1 million barrels per day to the market, you could see the second leg of this, inflation, not as bad as it was earlier this year, but it may not go down as fast. So that I think is the fly in the ointment, is the China slowdown reversing at some point in 23. But that's a little bit more in the distant future. I think right now it's all systems are positive.
Okay, and is there a sharp market rally that you would expect in the Indian markets, purely because of the reasons that you mentioned? The US perhaps going slower on rate hikes, crude prices falling, the dollar has retreated, and our own markets are virtually at all-time highs. You think this is the trigger that we needed to sort of take that next leg up?
Yeah, I think we're kind of bumping against this level that the market has tried to break through. I think it's 3 times now, but in any case, I think that if we break through this level, you could get a bit of a bull run here. And you never know in these kind of technical sentiment-driven rallies how quickly, how much things could go. But I think we look at it more in a medium-term perspective, and what you asked is clearly true in the short term. But I think the earnings fundamentals looking into calendar 23, fiscal 24 for India look very solid. So that's where we hang our hat in terms of being cautious about valuations, but finding opportunities given the growth backdrop that exists.
Morning, Arvind. What's been a bit of a boost for us is the way crude oil prices have corrected. And it seems we get some news bits on on a weekly basis, but crude is unable to go back to those highs, $9,500 per barrel. It's at around $85 per barrel, but that Chinese opening up factor, could it take crude higher, do you think so? Or do you think we're going to be in this vicinity?
Well, look at it this way. We are in a recession in Europe. We are in a slowdown in the US. We have seen demand slow down from emerging markets because a lot of local currency crude price are much higher, or product price are much higher. And crude can't go below 85. I think that's the part that we're not recognizing, that the crude market is at extremely high lows compared to any historical economic slowdown. Therefore, I would worry not about crude being a benign story, but what happens when, if the recession does abate, if demand does come back, and China, certainly from zero COVID, we know that when that goes, there's going to be a huge amount of revenge travel. So I think all the bias on crude is on the upside, not on the downside, given that the US has been sitting on, the Strategic Petroleum Reserve release, which has kept a lid on crude prices, and that ends at the end of this year. President Biden has already said that, around 70 or below on WTI they will buy. WTI is 75, so we've got a put from the U.S. government. We've got, OPEC, which is willing to defend low 80s on Brent. And we have China, whose demand is missing in action because of severe lockdowns. That's the second highest demand in the world. So I would say that crude in 23 is much more risk to the upside than anything that's, unless you're predicting that we're going to get a nasty recession, which I don't think anybody's predicting in this market hope trade. So I think that all the bias on crude is on the upside.
No, got that. And I think on the 4th or 5th there is an OPEC meeting as well, right? And they may cut, not hike, output, as that Wall Street Journal story reported earlier in the week. Arvind, you mentioned China and there are all these restrictions on all this, but isn't this kind of natural? Because is the direction clear of reopening? And there will be these intermittent kind of closures and restrictions, but is the direction, in your opinion, clear? It's one to reopen the economy over the next many months.
Absolutely. It's very clear that they've come out with this, I forget, it was a 20-point program or whatever to try to correct things. The problem they have is they're still working on an mRNA vaccine. Their own vaccine is not that effective. And they're also stockpiling some, drugs to be able to, antivirals to be able to deal with it. So I think they're moving in that direction. Winter is the worst time to try to reopen, right? Because you're going into the highly infective period. So my sense is that this will be the next 3 months. The news flow is going to be mixed. The policies will try to be positive, but COVID is going to spread. But once we get into March, April next year, I strongly expect China to, they've given every signal that they want to dish this strategy. And I think that's the time frame in which you should expect that.
Okay, all right. Arvind, always a pleasure speaking to you. Thanks a lot for joining in and giving us your view. Well, that's the word coming in. Looks like things are all set for a positive opening this morning. The US Fed indicating that slower rate hikes going ahead. That's definitely positive from the bulls' point of view. But let's see how things shape up. Let's slip into a quick break. On the other side, our list of top 10 stocks coming up. Stay tuned.